Let's get a check-in on the ETFs that track the major averages. These do not have those limit downs in place. So right now, the Dow ETF is indicated lower by 4.3%. The S&P 500 ETF, the SPY, is indicated lower by a little bit more than 4%. Joining me now is Joel Kaluna. He's Wedbush Securities Head of Technology and Media Training. Joel, good morning to you. Obviously, let's start with a sort of broader market question. Where do you see things going today and frankly, the rest of the week? Is there any end in sight for you?
Hey, good morning. Thanks for having me. Yeah, I mean, unfortunately, I think it's too early to kind of call the bottom. And that's been the case now for about a week and a half. And there's a lot of falling knives out there. And I think people have to be careful to kind of dip right in. And the key is going to be, last night you want to hear more, bipartisan tone from Trump. We didn't get that. And then obviously if anyone had, Twitter up or even just their cell phone, the headlines just accelerated to the downside. And I think America's going to wake up a little bit and take this a little bit more seriously. Obviously the NBA headlines, which you guys have touched on. Then Tom Hanks' headline hits the tape. And then you had Premiership kind of not playing in front of fans. So it feels like the economy is just right now the numbers are just going to kind of continue to go lower. And we really haven't seen the data yet. We started to see some numbers trickle out of China over the past week, and it's been pretty grim. And you got to think it's going to be like that here in North America as well. So I think it's too early to jump in. And what we're going to need to see as far as corona cases go, testing, kind of ramp up, and then see where numbers peak here in Europe and in the U.S. and then go from there. But it feels you're kind of guessing at this point, where the bottom is.
Paul Dietrich, Chief Investment Strategist for B. Riley Wealth Management, is also joining us. And Paul, at least from the notes that I see here from you, you might be a little less worried than what Joel is saying. But has anything changed since hearing what the president had to say last night for you?
No, I agree with Joel. Wall Street hates uncertainty. And that's what we're seeing now. And anyone who can tell you what the earnings impact of all this is going to be, they have no idea. The only good news is that we're seeing a cycle in China that this is playing out. The infections started late last year. The deaths started coming into the hospitals in early January. We saw a peak, and now in Wuhan, Hubei province, they had 8 new cases yesterday. That was the lowest they've had. Most of the manufacturing facilities went back to work 2 weeks ago in China outside of Hubei province. And this week, all the restaurants in Beijing and Shanghai were told to reopen. So we're seeing a cycle of infection, deaths, ramping up and peaking and then going down. We're seeing a similar cycle in South Korea, and I think we'll see the same thing. And it's going to be a 2 to 4 month period, and nobody knows what the earnings impact is going to be.
I'd like to give you both a chance to give us some actionable ideas here for investors. We just about have a minute and a half left. So, Paul, if you could quickly give us some of your ideas for investors, if indeed you think that there's an opportunity here, or if you think we should sit on the sidelines. Paul, go ahead.
Well, if you're still fully invested, as a lot of people were before the decline in the stock market, I would stay there because in the history of these health crises, we always see 6 months later that the market's hitting new highs. If you have money, I think this is definitely a buying opportunity, especially for a lot of companies that have no exposure to China, are going to do well, with people staying at home. Now is the time to buy those companies that have been hit just as hard.
I want to give Joel a quick second here. Joel, what are your opportunities here, if any?
No, I love the video game stocks. So Activision's kind of my top pick in the large cap group. It's a very clean story. Earnings are going to grow in 2020, and they have a very strong pipeline beyond this year as well, which will kind of support the multiple. And they've had some recent launches as well. And then on the short side, I think the semiconductors are still most at risk. Numbers need to go down. The stocks was up 60% last year. So anything tied to handsets, auto, and industrials, I'd avoid.
Paul Dietrich, Joel Kaluna, thank you both for joining us here. That is it for